time we answer a question on your stock in a little segment we like to call Your Stock, Our Take. Buy, sell, or hold. Your Stock, Our Take segment, I'm going to look at Newport Exploration Limited, sent in by a viewer who will go unnamed. It's NWX on the TSX Venture. That's the symbol. Trades around 25 cents, 26.39 million. A yield right now, 15.38%. So a very healthy yield. Newport holds royalty interest in producing oil and gas permits in the Cooper Basin in Australia and has a mining project in British Columbia, Canada. Revenues currently come from that 2.5% gross over GOR, essentially over licenses in the Cooper Basin in Australia. It's operated by a company called Beach. There is no time limit on or expiry on the GOR assets and no cost to the company to retain them. However, on the flip side, Newport has no control over operating decisions made by Beach, and accordingly, this prevents the company from commenting on Beach's operating plans going forward, essentially providing no guidance with zero control of their only cash-producing asset. The company goes so far as to recommend that shareholders and potential investors access material information relevant to the company as released independently by Beach and Santos in order to keep current during exploration, development, and potential production of all the licenses subject to the company's GOR. So Newport Mineral Explorations also has a property in BC, Canada. It's called the Chua property located in central British Columbia. We would assign limited value, to be honest, in our models to this asset. Let's look at the financials and the balance sheet. During the 3 months ended January 31st, Newport reported that royalty income was 1.4 million. This was down substantially from 2.49 million in the same quarter last year, the result of a decrease in oil sales. Net income was 814,000 compared to net income of 1.38 million, so down substantially as well in the same period last year. Royalty income is based on production volumes and oil prices. Both were lower year over year. Let's look at its dividends, which really attracts this viewer to the stock. On December 12, 2019, the company announced a quarterly fixed distribution dividend of 1 cent per share commencing on March 2020. Subsequent dividend payments are made every 3 months. The company has reserved the right to change the dividend payment from time to time and has and will likely continue to do this over time. We can look at the chart here. You can see when the dividend was implemented back in 2020, paid a 1 cent dividend, went to 1 cent. Then they accumulated cash, went to about a 3 cent for a quarter, back to a 1, 2, 2, 2, 1, 2, 1, 1, 1. So the last 3 quarters have been 1, and that is in a declining oil environment. You'd expect that. And there has been some decline in the production of the underlying assets too as well. So right as of now, the company has about 3.4 million Canadian in the treasury with no debt. So our conclusion, Newport could be a unique way to play higher oil prices if you thought oil prices are going higher, and could continue to pay a very strong dividend if the operator, Beach, continues to drill and brings on further wells that are under the company's gross operating royalty. Now, however, we and the company, as we've stated, energy prices and Beach's capital expenditure in terms of future drilling plans are uncertain. We do note that over the past year, its primary field, which provides Newport its cash flow, has seen higher decline rates. We have interviewed management in the past, and to be blunt, Newport appears to be a junior resource company that hit a lottery ticket type win with its royalty properly, and does not seem to be a team that is operating a sustainable model to, say, go out and seek profitable royalties or invest the cash flow in any sustainable growth initiatives. They will likely continue to ride out the cash flow from the existing royalty, which can provide a strong dividend near term, but they have no control over the continued operation of the underlying asset. So it is not a structure that would fit our criteria. The certainty going forward is just not there.
I'm curious how what would be the reason to not go out and reinvest some of that capital, right? I mean, if you're generating so much
Yeah.
cash flow, they've got a little bit of cash in the balance sheet relative to their market cap and expenses. You would think that most management teams would want to leverage that, like pay a dividend, right? Maybe a 5% dividend, a third of that cash flow, presumably, and then take the rest and go out and buy something else, even if you have to put, a little bit
Yeah,
of debt
it's
on the
true. I
balance
think
sheet,
right
right?
now they're not generating a ton of excess cash flow. It's, cash balance has stayed relatively in that range for a couple of years now. Uh, to replicate like the success that they have had with this asset, for example, or the assets that are producing that the primary wells in that basin. It would cost a hell of a lot more than say 3 million to go out there and get an underlying royalty. It does look like potentially the skill of the management team. I'm not trying to badmouth the team at all, but it's not really in going out and picking those. This seems to just they stumbled upon it years ago, and now their joint venture essentially partner, their royalty partner, is the one drilling out there. They have no control over this. I agree. I would rather see them siphon a bunch of cash away into a cash pile that they could go out and create more royalties, and then you have a sustainable model. And that's, I think, my challenge with investing in the business, even though the yield is so tremendously high right now. Do the decline rates continue? Does the operator just say, all right, we're going to let this run off, and the cash flows decline over time, and then you get 2 years of dividends, and the asset basically dwindles down to nothing, right? And that does seem to be
Mm-hmm.
occurring right now. Perhaps Beach goes out and drills more wells and continues to add cash producing wells, but again, the management literally says we have no control over that. So you have to look at Beach. You'd have to be going to Beach and asking Beach the questions, and Santos, and saying, are you going to be drilling in this specific property, to figure out whether or not this company, and they may or may not have specific disclosures in that regards, and whether that will be impactful. And then you're betting on the success of that drilling in that area too as well. So to make it a company that we would be significantly interested in, we would have to see the company continue to invest that excess cash in other assets, like Aaron said.
Yeah, and it's only about 4 million and change over the last year, and some of that was obviously during a higher
Mm-hmm.
commodity prices as well. So, if you compare that relative to the market cap of say 6 million, it actually doesn't look that
Yeah.
cheap to me.
I mean, if we had a guarantee that was a 10, 15-year life of these assets, right, and the company kept paying that dividend, then, you might have something. There is not that type of guarantee out there right now. It could be significantly lower in terms of life of producing at these levels and being able to sustain that dividend. It's an interesting little microcap to monitor for sure. And if oil prices were over the course of this year going to 150 a barrel, it's probably going to have some higher dividends at some point, and it might be interesting. But we don't know where the price of oil is going in the near term, and there's probably better ways. Like, we have a royalty company in our coverage right now that would tremendously benefit and has a far larger reserve life in the assets that it has royalties on. So I mean, that is something that we would recommend if somebody wanted to have a serious investment into this sector and was betting on higher oil prices over the course of this year. So we have a company in coverage that is a royalty producer that just has far less risk.
And just more clarity. Well, yeah, exactly. Far less
Yeah.
risk, more clarity on growth. Like, I'm just looking back at my notes from, that call February 9th. Um, you know, they're basically saying, like, management told us Beach Energy is very reluctant to discuss with them, on how many new wells that they're going to be drilling, how many of those wells are actually going to be part of the gross overriding royalty. So they don't even know if that's actually included. Anyways, I mean, Ryan hit the nail on the head with everything, but just it's interesting to look back at my notes and see exactly that. And I mean, that was the conclusion that we came up with at the time.
Yep. No, there's certainly worse ways to play. If you thought of higher oil prices over the course of this year, we're just trying to find the picks of the litter in this segment. And if you're looking at royalty companies, there'd be other companies that we like above this company, and that's what we would be putting our clients' dollars towards.